OPEC Plus fights the Fed? This will end in disasters for everyone. Should you invest in the oil and gas sector now? Just as I expected, this Halloween month has had a good start. Everything is green on Monday, the first trading day in October. S&P was up 2.6%. Oil was up 4.5%. Even long bond TLT was up 1.3%. Oh, except for Tesla stock, it was down 8.6%. It's because they missed delivery expectations. They say it's because of logistical challenges, but I think it's to do with demand issues. In this video, I will explain why OPEC Plus is fighting the Fed right now. Why Tesla is a big reason they are trying to keep inflation high as possible now. I will dive deep into whether it is a good idea to invest in the oil and gas sector. What's the risk to invest in them? Which side would you bet your money on, OPEC Plus or the Fed? Let me know. And of course, smash the like button. If you want to be my good boy, apply to write your first book with me. Welcome back to the Audacious Money Witch channel, where we talk about macroeconomy, stocks, bonds, commodity markets. If you like any of these topics, you are intelligent. That's why you're here. You know what to do and push my button. If you like what you see in today's video, because I can't push it from this side. This video is brought to you by my Patreon. If you are a sweet boy, go to patreon.com/magicalgoddess Cheryl to support all my work. If you want to be my good boy, apply to write your first book with me, author of best-selling books, Goddess Cheryl. My good boys always obey, and they always get rewarded handsomely. Have you been a good boy? You will get the encouragement you need to be on your author journey. I think Tesla is having demand issues now. The Fed has been raising interest rate to the highest it has ever been since 2011. Does people really need to upgrade for a Tesla from their gas car right now at today's rates? Shouldn't they wait for the full self-driving capability matured enough to upgrade? If you are rich, why buy a Tesla right now? Tesla is here to stay, as they say electric cars are the future. Every car makers have their own electric car on the market right now. Audi has their e-trons, Mercedes have their EQs, Porsche have their Taycans, even Toyota have their plug-in hybrids. The last gen of naturally aspirated supercar who can sing because she is a screaming V10 engine that is mid-mounted should be the ones to buy right now, because they will give you a spine-tingling sensation every time you ride in it. They are the last of its breed, sadly. It's really a shame oil and gas has to go, and it's critical to talk about cars. Because oil cartels, OPEC Plus, is worried about Western countries like Germany and the US switching the future of car industry to fully electric. By then, there will be less demand for oil and gas. That's why they want to drive the oil price up higher to make as much money as possible right now, before that future arrives into reality. Speaking of oil and gas, US and Germany, a former Pentagon advisor says US likely attacked $20 billion Nord Stream pipelines to isolate Germany. He said the most likely culprits behind the pipeline blasts are the United States and Britain. And that attack was carried out to prevent Germany from bailing on the war. Would the Russians destroy their own infrastructure? 40% of Russian GDP consists of foreign currency that comes into the country to buy oil and gas. The notion that they did is absurd. It's reported that thousands of pounds of TNT had been detected in both explosions. Only the Royal Navy, the United States Navy, Special Operations have the capability to do this. He suggested that the motive behind the attacks was to prevent Germany from bailing on the Ukraine war after Berlin began to give the impression that they were no longer going along with the war in Ukraine. If the CIA bombed these pipelines, that's an insane act of war that will further devastate Europe's economy and risk a full-blown war with Russia. At this point, the most important thing to note is that these pipelines have been caused unprecedented damage. Although Germany has not been receiving flows from either of these, Nord Stream 2 never went into actual usage, and Nord Stream 1 flows stopped weeks ago due to a broken turbine. It is certain that Germany will likely never, or at least not for years, receive flows from either one of these. This puts Germany in a very tight spot come next March when their storage is set to be drained. The point is, they are trying to keep this war going. So expect this crisis to last longer, as OPEC Plus is trying to keep the oil price high by cutting 1 million barrel per day in production. Crude prices jumped more than 4% Monday on bets that producer group OPEC Plus will announce a substantial output cut over the next 48 hours to stop a 4-month market slide that has shaken the nerves of some bulls in the trade. Be that as it may, noisy talk about using aggressive rate hikes to suppress inflation could also disrupt the best laid plans of longs in the market, leading to undue volatility in the days and weeks ahead. New York traded West Texas Intermediate settled at $83.63 per barrel, up $4.14 or 5.2% on the day. WTI ended September down 12.5% and the third quarter lower by 24%. Brent, the London traded global benchmark for oil, settled at $88.86, up $3.72 or 4.4%. Brent finished September down 11% and the third quarter lower by 22%. Energy traders are pumping up crude prices ahead of the OPEC Plus meeting as expectations are high that they will deliver the biggest reduction in output since the beginning of the world crisis. This will be the first in-person meeting since 2020, which means they will possibly go big here and deliver a cut more than 1 million barrels per day. The reduction will come just after a 1,000 barrels per day cut by OPEC Plus last month that was largely viewed as normal. It will also be only a few months since the alliance, which groups the 13-member Saudi-led Organization of the Petroleum Exporting Countries with 10 oil exporters steered by Russia, brought crude production back to world crisis levels following 2 years of extreme market headwinds from the world crisis. Oil bulls have turned out all market negatives to bet instead on demand in the fourth quarter amid predictions that top crude buyer China will do fewer or no world crisis lockdowns from here, and that the Biden administrations will stop draining the U.S. Strategic Petroleum Reserve by November in its bid to keep gasoline prices suppressed. Bloomberg Energy Markets commentator Julian Lee, however, noted that OPEC Plus hasn't met its production target for months now. Thus, whatever it announces Wednesday would have to be verified by the market later. But even a big reduction to targets may have little impact on actual supplies unless they can agree to redistribute production targets or the Saudis step in to act alone, adding that giving up market share, even if it's only theoretical market share, it's never popular. Russia is pushing OPEC Plus to cut output by a substantial 1.0 million barrels per day, or around that. Those familiar with the Kremlin's thinking have said, but Moscow is unlikely to contribute much to any production cut by the alliance due to the ongoing impact on its energy exports from Western sanctions imposed over its invasion of Ukraine. The Russians have also been undercutting others in OPEC Plus by selling their crude at heavily discounted rates to buyers like China and India. A production cut by OPEC Plus that Moscow does not fully participate in will benefit Russia more than the rest of the alliance, as it might continue to steal customers from the others. Then there's the issue of more jumbo-sized rate hikes by the Fed to bring inflation under control and what those could do to the economy. Investors are assessing the likelihood of another 75 basis point rate hike at the Fed's November meeting. The Fed's policy rate is now in the 3.00% to 3.25% range, a full 3% points higher than where it was at the start of 2022, and officials have penciled in another increase in December after the forthcoming one in November. Hawkish Fed talk typically pushes up the dollar, weighing on commodities, including crude, that are priced in the currency. When you talk about investing, everyone has a different time horizon. Buffett said, don't buy it for 5 minutes if you're not going to hold it in 10 years. In my opinion, oil is just a trade. It's a declining industry. In the short term, I think 10-year yield has peaked at 4%. TLT has bottomed at $100. Stocks will fall 30% as the kiss of death is triggered. Check out my last video for more information. Stocks will drag the oil price down with it. Now I'm going to show you my book called Happy. This is a bestseller. And my book, A Crazy Little Thing Called Life, another bestseller of mine. And my client, Taddy Eazzy's Wicked Pussy Perfume. It's an erotic novel, this one. All amazing books. Order your copy today. They do help with stress, anxiety, and depression. We are living in uncertain times. I thank you for being a fan and subscribing to my channel. I'm loving all the comments that I'm getting. Please like my video. So only send likes if you do like my content. And please let me know what you think in the comment section below. Bye.